Coming up on Market to Market. The Agriculture Department predicts the bottom line for most U.S. farmers will decline significantly this year. EPA says some Midwestern farmers are making progress in protecting the environment, but much work remains to be done. And despite strident opposition, the European Union is poised to approve its second genetically engineered crop in the past 15 years. Those stories and market analysis with Tomm Pfitzenmaier next.
This is the Friday, February 14 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Government data this week revealed Old Man Winter is having a chilling effect on the U.S. economy. According to the Commerce Department, retail sales fell 0.4% last month in the wake of a smaller decline in December. With yet another snowstorm blanketing a third of the nation this week, it's likely that February will mark the third consecutive month of weak job growth. Harsh weather conditions also were blamed for a steep decline in factory output in January, breaking a string of 5 straight months of increased production. And the nasty weather means that waiters, limousine drivers, and store employees are likely to lose wages. Service sector employees, of course, aren't the only ones facing the prospect of a thinner pocketbook. A case in point could be found in rural America this week after the Agriculture Department predicted farm income will decline sharply this year.
Net farm income is forecast to fall nearly 27% this year to $95.8 billion. That would still be above the 10-year average. The 2013 income level was $130.5 billion, the highest since 1973 when adjusted for inflation. If realized, this would be the smallest income level since 2010. The decline is attributed primarily to sharply lower crop cash receipts for both corn and soybeans. At 13.9 billion bushels, the 2013 corn crop was the largest in history, which contributed to lower prices. USDA is calling for $11 billion less in corn receipts this year and $6 billion less in soybean sales.
All right, I'm about to start signing.
Another factor in the government's estimates is the elimination of direct payments under the recently enacted Farm Bill of 2014. Also at issue is the uncertainty regarding enrollment and payments in other programs this year, which could reduce government disbursements by 45%. Traditionally, input costs have paralleled growth in market price for grain. However, this year, total production expenses are forecast to decline $3.9 billion in 2014. If realized, that would only be the second time in a decade that has occurred. The growth rate in farm assets, debt, and equity also is projected to slow in 2014 compared to recent years. Lower net income, higher borrowing costs, and moderation in the growth of farmland values are all contributing factors to the prognosis. The value of farm assets and farm sector debt both are expected to rise just over 2% in 2014. That's counter to the last few years. However, USDA says the historically low levels of debt to asset levels and equity affirm the agricultural sector's strong financial position. Another bright spot in the disappointing outlook could be found in the livestock sector, where receipts are expected to rise 0.7 points, largely due to a 7% increase in dairy earnings.
5 years ago, the Environmental Protection Agency called on states along the Mississippi River to develop strategies in reducing nutrients in a lifeless portion of the Gulf of Mexico known as the dead zone. The Gulf Hypoxia Action Plan established a target of cutting the total nitrogen and phosphorus loads in the Gulf by at least 45%. Despite the lofty goal, a dozen states in the Mississippi Basin are only beginning to comply. Iowa, on the other hand, has moved beyond studies and implemented its own plan. EPA officials acknowledged the progress in the Hawkeye state this week. But they also noted, since only a fraction of Iowa's farmers are participating in the effort, there is still much work to be done.
The main cause for low oxygen levels in the dead zone can be traced directly to upstream polluters. While there are several sources of nitrate and phosphorus pollution that can be linked to the 12 states making up the Mississippi River Basin, agriculture typically gets the black eye. In order to keep the federal government out of the nation's farm fields, a bridge of sorts is being built between agriculture and Capitol Hill. Many states have plans to reduce nitrogen and phosphorus runoff, but only Iowa has taken the next step by establishing its own nutrient reduction strategy. The plan caught the eye of Environmental Protection Agency Region 7 Administrator Carl Brooks.
Right now. In fact, it's important to emphasize in Iowa that the state's nutrient reduction plan has checked off more boxes than any other of its states in the Mississippi Basin right now. One good thing about the Iowa plan is that instead of just running around corner to corner in the state, scattering money all over, there was a real focus on priority watersheds, ones where we know there's been nitrogen and phosphorus loading that's too high, ones that have real erodible soils, and ones where we know we can make a difference early on.
Brooks, Iowa Department of Natural Resources Director Chuck Gipp, and Iowa Secretary of Agriculture Bill Northey took their show on the road this week, spending time talking to journalists and certified crop advisors.
We need to show momentum. We need to show that people are engaged. And I think engaged in a way that is very different than what would happen in a regulatory environment. In a regulatory environment, we'd fight about it in court for as long as we could, and we fight about the rules for as long as we could, and then we'd tell farmers what to do, and all they'd care about is complying. They wouldn't care about water quality. They'd worry about staying legal with the government.
In its initial year, Iowa's nutrient reduction strategy handed out $2.8 million in matching funds to a little more than 1% of the state's 90,000 farmers. The money will be used to plant cover crops, install bioreactors, and build wetlands. Scientists will collect data and use it to demonstrate that it is possible to clean up waterways while cutting on-farm expenses. The goal is a 45% reduction in the amount of nitrogen and phosphorus washing into thousands of miles of Midwestern waterways every year.
Because it's their pond, it's their stream. It's a little bit distant to say how that impacts the Gulf of Mexico because Iowans are a long way from Louisiana. But it's important to know that this also improves their own local water bodies out there because people want clean water. Water quality is a big concern across Iowa and across the nation right now. And so we need to get people to understand that they can be a part of solving this issue by being careful about what they do on their own property.
There are, however, those who believe the hand of government is the only means by which farmers will reduce nutrient runoff.
You fix it by, first of all, admitting that it's a problem, and you throw to the side the idea that self-regulation or voluntarism is going to improve it in any meaningful way in an acceptable time period. So you have to start.
Bill Stowe is the CEO of Des Moines Waterworks, a municipal agency providing drinking water for 500,000 Central Iowans. Last year, after attempting to mix water from several sources to comply with EPA nitrate regulations, Stowe was forced to turn on the world's largest nitrate removal system, costing taxpayers hundreds of thousands of dollars. It had been 6 years since the system was last put into use. While Stowe has threatened legal action to get the EPA to enforce standards outlined in the Clean Water Act, Brooks believes an environment of volunteerism is a better choice than government legislation.
We've been a constructive player. I think this agency is viewed as somebody that is constructive and engaged instead of threatening and standing outside the room with a club in our hand waiting to come in and start laying waste to Iowa. That's not how we see our job at all.
Despite vociferous objections from the majority of its members, the European Union was poised this week to approve its second genetically modified corn crop in the past 15 years. DuPont Pioneer initially sought approval of its TC 1507 variety in 2001. But the EU has the world's tightest regulations on importing and growing biotech crops, and it took 12 years for the seeds to wind their way through an arduous approval process. Other U.S. companies have complained repeatedly that EU standards ignore basic science, and those concerns prompted Monsanto, the world's largest seed producer, to announce plans last year to withdraw all applications for its products. Paul Yeager examined the controversy surrounding genetically engineered crops and filed this report.
In the early 1970s, scientists found a way to add microscopic strands of genetic material from one species to that of another. For the first time, 2 or more species DNA, the genetic material that dictates how an organism looks and acts, could be linked in a lab in a way that wouldn't happen naturally. 25 years later, U.S. farmers began planting crops that were considered transgenic, meaning they contained genetic traits of other organisms. The innovation opened a world of possibilities for improved food production, but it also drew fire from critics.
I think the agricultural world was pretty excited because this was a quick way of making modifications to a plant that could not have been done before. There was a small segment that was concerned because it's easy to think of some horror stories that, how plants could be modified in a way that could cause problems.
Despite some reservations, the amount of farmland being planted with genetically modified or GM crops has grown steadily since their commercial introduction in 1996. According to a leading biotech advocacy group, a record 18 million farmers in 27 countries grew biotech crops in 2013.
There was not adoption in other places like Europe, where farmers and the public were not in support of these technology and these crops. And so there have been very little adoption in Europe. There was large adoption in South America.
As the technology spreads, scientists are watching the responses of certain plants and insects to biotech crops. The concept of natural selection, in which only organisms that are best adapted to their environment survive, comes into play. Individual weeds may have traits making them less susceptible to herbicide. And the International Survey of Herbicide-Resistant Weeds revealed that 232 weed species have shown resistance to at least one type of herbicide.
We need to find other ways to fit into the current production system for farmers to control the weeds, because we've selected weeds that are highly adapted to herbicides and evolved resistance very quickly.
The U.S. Food and Drug Administration believes many genetically engineered products are similar to their conventional cousins. And the onus is now on the company marketing the food to ensure its safety. Nevertheless, some believe the federal government needs more rigorous approval standards.
We've looked at the safety data for the current crops that are grown in the U.S., and we're comfortable telling consumers that the foods made from the currently genetically engineered crops that farmers are growing in the fields in the United States are safe to eat. We do feel that the Food and Drug Administration, whose job it is to ensure that we have safe food here in the United States, that they haven't done an adequate job of oversight of those genetically engineered crops. Their regulatory process is a voluntary consultation process. They don't have a mandatory pre-market approval process.
Major developers of genetically modified seed face sharp criticism over potential risks of their products. But officials at DuPont Pioneer, a leading seed producer, say their approval process involves 150 tests and requires an average of 13 years and $130 million.
I think the European regulations use what we call the precautionary principle, which in a way of speaking is, since we don't know for sure, let's not use the technology. That's the precautionary principle. If we were to use the precautionary principle in our lives on a regular basis, we would probably never get out of bed in the morning. One would be correct to state that we don't know for sure, but we know with a fair amount of certainty that we're in a good spot here with this technology.
Some states and consumer groups are seeking mandatory labeling of foods containing genetically engineered ingredients, while others insist the government should be more involved before products hit the grocery store shelves.
Our view is if you're worried about the safety of these foods, you shouldn't be trying to get mandatory labeling. What you should be doing is trying to get FDA more authority so they can determine whether these are safe before they get to market. Determining safety after they're at market with labeling is the wrong way in our mind. That's the wrong public policy.
Those developing new GM crops, however, argue that lives are already being lost due to bureaucratic red tape. At the dawn of the 21st century, nearly 1 billion people all over the world were hungry. Since the United Nations projects world population will exceed 9 billion by 2050, the agency is calling for a 100% increase in food production by mid-century. According to the UN, 70% of the additional production will be realized through the use of efficiency-enhancing technologies. And proponents believe genetic engineering offers a way for crops to be grown on land previously viewed as unsuitable for food production.
It's a challenge that I've come to call the single greatest challenge in human history. Can our planet produce enough grain and cereal and food sustainably to feed the 9+ billion people who will be on our planet by the year 2050?
World hunger notwithstanding, some caution that U.S. farmers are overusing GMOs in some regions and may need to consider alternatives.
With any technology, whether it's genetic engineering or other kinds of varieties and that farmers have adopted, one has to use them in a judicious fashion, in an integrated fashion, in a sustainable fashion. And what we are beginning to see is that farmers have not done that with these genetic engineered varieties, and we're beginning to see that they've overused them and abused them. It's just one tool in the toolbox that scientists can use to help farmers do their job.
For Market to Market, I'm Paul Yeager.
Next, the Market to Market Report.
Wheat futures contracts posted solid gains again this week, while corn traded sideways as the trade wrestled with a case of midwinter doldrums. For the week, March wheat gained 21 cents, while the nearby corn contract moved a penny higher. Strong foreign demand supported soybean prices this week as the March contract gained 6 cents. Nearby meal followed suit with a gain of $3.60 per ton. In the softs, cotton also rallied this week as the May contract improved by $1.20 per hundredweight. In the dairy market, March Class 3 milk gained 33 cents, while the deferred contract advanced by 43 cents per hundredweight. Over in livestock, the April cattle contract gained 70 cents, nearby feeders advanced by $2.67, and the April lean hog contract gained nearly $1.50. In the financials, the euro gained 7 basis points against the dollar. Crude oil advanced by 42 cents per barrel. COMEX gold improved by $55 per ounce, and the Goldman Sachs Commodity Index gained more than 10 points to settle at 641.05. Here now to lend us his insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
We're glad to have you with us, and as we're heading into Valentine's Day weekend, do we have some Valentine's Day love for wheat growers here in this market?
I think we've had it. We've rallied March corn or March wheat, up to around $6. We kind of peaked over that at the end of the week, but fell back under it by the end of the week. I think we're kind of up to levels where it's really getting toppy. Momentum indicators are rolling over, maybe even did roll over after Friday's trade. So I think that going from here is going to be pretty tough.
Pretty good selling opportunity.
Yeah, that's what I believe.
All right. Now, as we look a little bit farther into the deferred contract, where do you see the wheat market headed as we roll into spring?
Well, same thing. There's always the question of was there winter wheat damage and all that. But in the end, I guess I think that the deferred contracts are probably topping out too. So I guess I'd be a seller of wheat across the board, probably up at these levels.
And now this recent strength we saw this week and last week, what was prompting that? Excuse me, was it winter wheat kill worries?
Well, I think there's some of that. Some of there were those that believed that the supply-demand report was a little bit friendly, certainly friendly to corn, and that sort of pulled all the grains along. The strength in the bean market pulled the wheat along. So there are some other factors there besides the actual fundamentals of the wheat market that I think prompted that. Plus, we've got fairly decent fund buying all along, and all the grains has been pretty good here. And not only that, but livestock and crude oil and a lot of different commodities. So all those are supportive factors, I think.
All right, well, now let's jump over to the corn market. We saw a little bit of a rise this week in corn, mostly sideways. Where's this old crop headed?
Well, there's big resistance on the March corn up at 450. We went up and sort of tested that after that report the other day. And that's also generated fairly good farmer selling, which has kind of tended to cap it. So I would guess that's probably, I mean, maybe we'll overshoot it by a few cents, but I would guess we're probably up in those levels. Again, corn, much like wheat, is not exactly structured the same technically, and maybe has a little more upside potential, but it's getting pretty overbought also.
And now these export reports that we've been seeing on the corn side, does the market expect those to continue? Are we going to see strong international demand for a while?
Well, when corn prices were lower than where they are now, we were sort of in the driver's seat. We had the cheapest corn on the market, and that was generating some pretty good buying. Now, there's a couple things that have happened. Number one, the Ukrainian corn crop was increased in this last report. They've got reportedly 8 to maybe 9 million metric ton of corn to sell. They tend to be lower priced than they are now after our rally. South American crop, which has had a few hiccups here and there, but is generally quite good, is going to begin to come onto the market and be exportable coming into the spring. So we've probably kind of reached up to the higher levels of what we're going to see. And I guess to me, we're going to have a little trouble achieving that extra 150 million metric ton or 150 million bushel that the USDA was forecasting.
All right. Well, now let's take a look over at soybeans. Old crop soybeans just on a tear these last 2 weeks. Have we topped out there? Similar story?
I don't know if we have. I read someplace this week that we're an island of tightness, which in the U.S., which is kind of true. There's worldwide, there's plenty of product around. Canadians had a big canola and soybean crop. That's why you saw imports increased a little bit in that last report. But we're down to what I think most people view as pipeline. If we don't have any cancellations from the Chinese and the South Americans are a little slow at getting some product moved, we're going to continue to be tight. We've got a new NOPA crush number out Tuesday morning, which is expected to show that the domestic demand for soybeans to produce meal has been strong also. So I guess I wouldn't rule out further upside. Breaking out above 1340 on the March was pretty positive. We did have a reversal when we went up above 1350, reversed and closed lower on Friday, so that may put a little caution into the market going early next week. But overall, I think we've got a period here where things are going to stay pretty tight.
Good time to make some sales ahead of Chinese cancellations.
Yeah,
on that
I think you want
to
be ahead of the curve on that rather than behind it. So I guess I would use this as a selling opportunity. We've rallied, 70, 80 cents on beans over a fairly short period of time here, and those are the kind of rallies I think need to be rewarded.
You bet.
It's also drugged the new crop along and created some opportunities to sell that up in that 1130 to 1145 range, and I certainly would be a seller of new crop beans at those levels too.
All right. Well, now let's take a look over at livestock. On the fat cattle side, we saw a bit of a rally this week, 70 cents or so. In the nearby, where's the fat cattle market headed?
Well, I guess the question is, is demand strong? And the demand so far with these higher beef prices has hung in there really well. The cash market, everybody's expecting some weakness this week, and there really wasn't any. And I think that popped us up, and probably will continue to. I think there's a chance that April cattle could retest the highs. I'm not in the camp that thinks we're going to make new highs, but we certainly could retest them.
Good chance to get up there and at least plumb those numbers again and see where we're at.
Yeah. The cattle market is strong enough, and unless there's some catastrophic thing comes along, I think you're going to be fairly well supported. So I don't know that there's a reason to get really aggressively selling the market, but certainly having a put under the market wouldn't be a bad idea, because when things get really good, they can change and not be good for a while. So,
right. And it's a lot of cash on the table when you're talking 140s fat cattle.
Absolutely, there is.
Now let's take a look over at feeder cattle. We've seen impressive strength with corn trading sideways and the fats trading relatively sideways. Feeders are still climbing.
Yeah, I know. It's an amazing market, and I have no idea how high that can go. You guys out there wanting to buy feeder cattle, and I guess they're just going to pay till they get tired of paying. I don't know what else to say.
All right. Well, we appreciate the honesty. So it's still climbing today. So
Yeah.
we'll just keep an eye on the cash
And
trade.
like you said, normally you would think, well, that's a sign that corn prices are falling apart. It may be a sign that there's a perception that corn prices are going to fall, because that's kind of an anticipatory move on cattlemen's part. When you buy calves, you're sort of incorporating that into your calculation. So I guess you'd have to say they're anticipating lower corn prices and relatively strong fat prices.
All right. Now, we do have the cattle on feed report next week. Any advice for producers before that comes into play?
I think that's fair. Those numbers are going to be fairly well anticipated. I just think if you have a $1 or $2 rally beyond the levels we closed that Friday, you start looking at making sales or buying puts, and irregardless of what you think the cattle, because I don't really think that's going to change things very much.
All right, but just be safe.
Right.
Cover your tail.
Absolutely.
All right, now let's take a look over at the hog market. Again, impressive strength throughout this week especially. Where are the hogs going on here?
Strong demand. It looks, with April hog, Feb's went off the board on Friday, so April comes on as the front month at 95, 96. I think you could retest the $100 level maybe. June hogs 105, 105 and a half. They could maybe make a run at 110. I think the hogs are definitely benefited from the strength in beef. The fact that we're able to sell beef makes the pork more attractive. Export demand for that's been good. So I guess I'm not really concerned about the hog market completely falling apart here. I think it's going to be, the whole complex is going to be well supported into the spring.
All right. Well, Tom, as always, we appreciate you being with us on the show tonight.
No problem.
That wraps up this edition of Market to Market. But Tom and I will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed and Facebook account exclusively at the Market to Market website. And be sure to join us next week when we'll examine the impact of persistent drought in California. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.